now on our week module 5, and it is all about a cost basis or accrual basis of accounting and financial reporting in hyperinflationary economics. The learning objectives of these topics are: differentiate what is cost basis and accrual basis of accounting, restate account balances from cost base to accrual base of accounting, identify business entities, the advantage and disadvantage of using cost base and accrual base, financial reporting in hyperinflationary economics, identify international effect of in hyperinflationary economics, and survival of business operation on hyperinflationary economics. And topics to this are cost basis and accrual basis of accounting, financial reporting in hyperinflationary economics. So we have here what is accrual base versus cost base of accounting. Accrual basis is the effect of transactions and other events are recognized when they occur, and not as cost or its equivalent is received or paid, and they are recorded in accounting records and reported in the financial statement of the period to which they relate. So, in a cost base, income is recognized only when cost is received, and expense is recognized only when paid. So, that is the definitions of the two. Then, for items such as sales, cost sales plus cost collection on trade receivable plus advances received from customer, and that is on a cost base. In accrual base, cost sales plus sales on account, an accrual base. So you are going to recognize here receivables. For purchases, cost purchase plus payments on trade payables plus advances paid to suppliers. For accrual base, cost purchase plus purchase on account. For cost of goods sold, we have the cost basis purchases adjusted for changes in the beginning and ending inventories. For accrual base, it composed of purchases adjusted from changes in the beginning and ending inventories. Other items of income. Income includes only those that are received in cash. So, any income that are not received in cash are not recorded here. But an accrual base include all items earned regardless of whether or not cash is received. So, that is now the difference of cost base and accrual base. Some other items such as expenses. Expense include only those that are paid in cash. For accrual, expense include all items regardless whether it is cash paid. For income tax expense is recognized only for payments made. Income tax expense is recognized considering deferred tax expense benefit. For depreciation is provided normally. For depreciation is provided normally. So, parehas sila. Bad debts, no bad debts are recognized because receivables are not recognized. Bad debts are recognized for receivables whose collections is doubtful. So, accounting methods such as cost base and accrual base. The congressional treasurers may wonder how to meet effective records for this financial transaction and accommodate its financial condition. When dealing with these financial matters, one primary interest is accessible to the financial data. The financial transaction should be recorded in such a way that a bookkeeper or successor treasurer will be able to both understand the historical data, and consistently process new transactions. Additionally, financial statements should be presented in such a way they are easily be comprehended. The financial condition needs to be clearly understood by lay and roster leaders, ministry partners, and other interested parties. Evaluating the needs of a particular congregation, it is important for a congregation leadership to determine its preferred method of accounting. A certain external requirements, such as audits, loan covenants, might necessitate a particular method of accounting. Absence of this requirement, however, may choose to account for financial activities using cost or accrual method. Some organizations choose to implement modified cost method, a hybrid that accounts for short-term asset using cost method for long-term asset using accrual method. This accrual method is the only method for accounting that conforms to the provisions of GAAP in the U.S. This method provides the most information regarding the financial status of the organization. However, the accrual method of accounting can be more complex than other methods and often requires more robust accounting software and technical expertise. Factors and implications that can impact the choice of accounting method includes financial expertise of both preparers and recipients of financial data, sophistication and availability of accounting software, and external reporting requirement. The process of choosing an accounting method should involve several leaders, including some levels who are not directly involved with financial management. Involving a variety of stakeholders may facilitate a transparent decision-making process as well as create an opportunity for a financial decision. What is cost method? First, start with simpler and two method, cost-based accounting. With this method, we record some of its received and expenses as they paid. Example, as if a client for 1,000 in March 1 and received payment of 1, you would record the income as received for the month of April. This is when you actually had the money in hand. It's important to note that this method does not take into account any accounts receivable or payable, and it is because it only applies to payments from clients, whether in the form of cash, checks, or credit receipt when payment is received. Likewise, cost accounting only records your expenses when money leaves your account to pay expenses to suppliers, vendors, and other third parties. In other words, if you have a small gift card and stationery business that purchased paper supplies on credit in June but didn't actually pay the bill until July, you would record those supplies as a July expense. If your business makes less than 25 million in sales a year and does not sell merchandise directly to consumer, the cost accounting method might be the best choice for you. In fact, it's often the accounting method of choice for every small business, such as sole proprietor or partnership. The advantage of cost accounting. Cost accounting method certainly has benefit. The chief among those being is for its improved by cash flow. Simplified profit process. Many small businesses choose cost method of accounting because it's simplified booking process that is similar to how you might track your personal finances. It's easier to track money as it moves in and out of your bank accounts because there are no need to record receivables and payables. For small companies that do business primarily such cash transactions and do not maintain large inventories or product, the cost accounting method can be convenient and reliable way to keep tabs on revenues and expenses without the need of a great deal of bookkeeping. Income taxes. When it comes to taxes, such basis accounting has definite perks. This method do not have to pay taxes on any money that has not been received. For instance, if your invoice or a client of 1,000 October and don't get paid by January, you don't have to pay taxes on the time of the income until January the following year. This helps improve cash flow and helps ensure that your small business has funds available for tax payment. For individuals and extremely small business, this can be crucial for keeping your business afloat when cash flow is restricted. While accounting might be your favorite aspect of being your own boss, it's still important to understand that at least the basic and the best practices of small business accounting. As long as your sales are less than 25 million per year, you're free to use either the cash or accrual method. Why do you choose one over the other? Well explained in the basic cash account method, as well as the pros and cons of each, that you may make an informed decision. Disadvantage of cash accounting. While the method of accounting is definitely simpler and the most common accounting method, it has drawbacks as well. Inaccurate financial picture. Since it doesn't account for all incoming revenue and outgoing expenses, the cash accounting method can lead to believe you're having a very high cash flow a month when it is actually there is a result of previous month's work. No account receivable or accounts payable record. Additionally, because the method is simple, it does not require your accountant or bookkeeper to keep track of actual dates corresponding to a specific sales or purchase. In other words, there are no records for accounts receivable and accounts payable, which can create difficulties when your company does not receive immediate payment and has outstanding bills. It doesn't conform with the GAAP. The generally accepted accounting principles are the standard framework of rules and guidelines that accountants must adhere to when preparing a business financial statement in the U.S. Under these guidelines, all companies with sales of 25 million must be used the accrual method when bookkeeping and reporting their financial performance. This means that if your business were to grow more than 25 million, you would need to update your accounting practices. If you think your business could exceed 25 million in sales, in the near future, you might want to consider optioning the accrual accounting method when you're setting up your accounting system. What is the accrual method? Accounting standard outlined by the GAAP stipulate that the use of accrual accounting for financial reporting, as it provides a clear picture of the company's overall finances. But just what is in this method? With the accrual accounting method, income and expenses are recorded when they are billed and earned, regardless when money is actually reserved. So, example, if a small business bills 1,000 income on March and would record in that 1,000 as income in March bookkeeping, even if funds didn't clear your account until April. The same holds true to expenses. So if your small gift card and stationery business buys paper supplies on a credit in June but does not actually pay until July, you would still record it as June expense. The advantage of accrual accounting: unlike cash accounting, which provides a clear, shortcut vision of companies' financial situation, accrual accounting lets see more long-term view of how your company is faring. This is because accrual accounting accurately shows how much money you earn and spend within a specific time, providing a clear gauge of when business is spread up and slow downs over the course of business quarter or a full year. Additionally, it conforms to national accepted accounting standard, means that if business were to grow, the accounting method would not need to be changed. More accurate financial picture. Although this method requires more intensive bookkeeping, it gives small business owner a more realistic idea of income and expenses during a certain period of time. This can provide you with a better overall understanding of consumers' spending habits and allow you to plan better for peak months of operation. Conforms with GAAP. Because the accrual method conforms to the GAAP, it must be used by all companies with more than 25 million in annual sales, or as 25 million sales revenue per mark in high for most businesses, and most will only be chosen to use for accrual accounting method if their bank requires it. Disadvantage of accrual accounting. While accrual accounting has its advantages, there are some drawbacks as well. Among the most commonly cited in its more complex method of bookkeeping and its accurate portrayal of the company's short-term financial situation. More resource intensive. Because accrual accounting adds complexity and paperwork to your financial reporting process, many small business owners view it as more complicated and expensive to implement. Since a company records revenue before they actually receive cash, the cash flow has to be tracked separately to ensure you can cover bills from month to month. Inaccurate short-term view, while accrual-based of accounting a better long-term view of your finances, the cash method gives you a better picture of the funds in your bank account. This is because the accrual method accounts for money that is yet to come as a result if you don't have careful bookkeeping practices. The accrual-based accounting method could be financially devastating for a small business owner. Your books could show a large amount of revenue when your bank account is completely empty. How to choose the right option for business? While the accounting system or the financial reporting method you choose for small business is ultimately a management decision, it depends on your business goals, sources you have available, and your organization financial requirements. Unless your company makes more than 25 million in gross annual sales, you're free to adopt whichever method makes more sense for you. However, keep in mind that IRS requires companies to use and maintain the same accounting period to report taxable income for the year, no changing halfway through the tax. Some small business can choose the hybrid method of accounting whenever they use accrual accounting for inventory and cash method for their income and expense. If you're unsure of which accounting method is the best for your small business, speak with CPA professional and tax professional. For more tips, there are related checklists for finance-related tasks you must complete on a daily, weekly, monthly, and yearly basis. Accrual accounting means revenue and expenses are recognized and recorded, they are occurred, while cash-basis accounting means that line items aren't documented until cash exchanges hands. Cash-based accounting is easier, but accrual accounting portrays a more accurate portrait of company's health by including accounts payable and accounts receivable. The accrual method is the most commonly used method, especially by publicly traded companies, as it smooths out earnings over time. Accrual method accounting The revenue is accounted for when it is earned. Typically, revenue is recorded before any money changes hands. Unlike cash method, the accrual method revenue when product or services is delivered to a customer with the expectation that money will be paid in the future. Expenses of goods and services are recorded despite no cash being paid out yet for those expenses. So, for cash base of accounting, revenue is recorded on the income statement only when cash is received. Expenses are recorded when cash is paid out. The cash method is mostly used by small business and for personal finances. The key differences, the key advantage of the cash method is simplicity. It is only accounts for cash paid and received. Tracking the cash flow of companies is also easier with cash method. But disadvantage of cash method is that it might overstate the health of the company, that is cash rich but not large sum of accounts payable that are exceeded the cash on the books and the company's current revenue stream. An investor might conclude the company is making a profit when in reality losing money. Meanwhile, the advantage of accrual method is that it includes accounts receivable and payable. As a result, it is a more accurate picture of the profitability of the company, particularly in the long term. The reason for this is that the accrual method records all revenues when they are earned and all expenses when they are incurred. Example, the company might sales in current quarter that couldn't be recorded under the cash method because revenue isn't expected until the following quarter. An investor might conclude that the company is unprofitable when in reality the company is doing well. The disadvantage of this method is that it doesn't track cash flow. As a result, might not account for companies within a major cash shortage in the short term. Despite looking profitable in the long term, another disadvantage of the accrual is that it can be more complicated to implement since it is necessary to account for items like unearned revenue and prepaid expenses. A special consideration for accrual method is that it's most commonly used for companies, particularly publicly traded companies. One reason for this accrual method popularity is that it is smooth our earnings over time, since it accounts for all revenues and expenses as degenerated instead of being recorded intermittently under the cash-based method. For example, under the cash method, retailers would look extremely profitable as consumer buy, but for holiday season, but would look unprofitable for Q1 as consumer spending deadlines following the holidays. Both methods have their advantage and disadvantage, for it only shows part of the financial health of the company. Understanding the both accrual and the company's cash flow with the cash method is important when making an investment decision. Accrual versus cash-based accounting. Let's say you own a business that sells a machinery. If you spend 5,000 worth of machinery under the cash method, the amount is not recorded in the books until the customer hands you the money and you receive the check. Under the accrual method, the 5,000 is recorded as revenue immediately when the sale is made, even if you receive the money a few days or weeks later. The same principle applies to expenses. If you receive an electric bill for 1/7 under such method, the amount is not added to the books until you pay the bill. However, under the accrual method, 1/7 is recorded expense on that day received you receive the bill. What is the difference between the cash-based and accrual-based? Cash-based and accrual-based are two different methods used to record accounting transactions. The core underlying difference between this method is in the timing of transaction recordation. When in aggregate over time, the results of the two methods are appropriately the same. The brief description of each method follows. A cash-based, revenue is recorded, cash is received from customers. Accrual-based is received. Timing differences occurs when revenue is delayed under the cash base, under customer payments arrive at company. Similarly, recognition of expenses under cash base can be delayed until such times as a supplier invoice is paid. So, to apply this concept, there are several examples. So, revenue recognition, company sales, green, customer, pays in April, then the basis will be civil. No? So, under the accrual basis, the seller recognizes sale on March when it issued the invoice. Expense, a company buys 5,000 office supplies in May, pays in June. Under the cash base, the buyer recognizes the purchase in June when it pays the bill. Under accrual base, the buyer recognizes the purchase in May when received the supplier's invoice. The usage. The cash basis is only available for use if the company has more than 5 million of sales per year. It is easier to account for transactions using cash base since no complex accounting information, accounting transactions such as accrual or deferrals are needed. Given in its ease of use, the cash basis is widely used in small businesses. However, relatively random timing of cash receipts and expenditure means that reported results can vary between unusually high and low profit. Huwag mo sakit ang ngipin. The cash basis is also commonly used by individuals when tracking their personal transactions. Okay, we go now to International Standard 29, Financial Reporting in Hyperinflationary Economics. This standard shall be applied to the financial statement, including the consolidated financial statement of any entity whose functional currency is the currency of a hyperinflationary economy. In hyperinflationary economy, reporting of operating results and financial position in the local currency without restatement is not useful. Many losses purchasing power of such a rate that comparison of amounts from transaction and other events that are occurred at different times, even within the same accounting period, is misleading. This standard does not establish an absolute rate at which hyperinflationary is deemed to arise. It is a matter of judgment when restatement of financial statement in accordance with this standard becomes necessary. Hyperinflation is indicated by characteristics of economic environment of a country which includes but not limited to the following. The general population prefers to keep it in non-monetary assets or in a relatively stable foreign currency. Amounts of local currency held are immediately invested to maintain the purchasing power. The general population regards monetary amounts not in terms of local currency but in terms of relatively stable foreign currency. Prices may be quoted in that currency. The sales and purchases of credit take place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. The interest rates, the wages, the prices are linked to the price index. cumulative inflation rate over 3 years is approaching for exceeds for a 100%. It is preferable that all entities that report in the currency of the same hyperinflationary economy apply this standard from the same date. Nevertheless, the standard applies to the financial statement of any entity from the beginning of the reporting period in which it identifies the existence of hyperinflationary in the country on whose the currency it reports. The restatement of financial statement, the prices change over time as the result of various specific or general political, economic, and social forces. Specific forces such as a change in supply and demand, technological changes may cause individual prices to increase or decrease significantly and independently of each other. In addition, general forces may result in changes in general level of prices and therefore in the general purchasing power of money. Entities that prepare financial statement on the historical cost basis of accounting do so without regard either to change in general level of prices or increase in specific prices of recognized assets or liabilities. The exception of those assets, liabilities, that the entity is required or chooses to measure at fair value. Example, a PPE may be revalued to fair value, and biological assets are generally required to measure at fair value. Some entities, however, present financial statements that are based on current cost, a price that reflects the effect of change in a specific price of asset held. A part of the improvement of IFRS in May 2008, the board changed terms used in ECS 2020 to be consistent with IFRS as follows. The market value are amended as to fair value. Result of operation as to net income were amended to profit and loss. In hyperinflationary economy, financial statements, whether they are based on historical costs or current cost approach, are useful only if they are expressed in terms of measuring unit current at the end of the reporting period. As a result, the standard applies to the financial statement of entities reporting in the currency of hyperinflationary economy. Presentation of the information required by this standard as a supplement to standard financial statement is not permitted. Furthermore, separate presentation of the financial statement before restatement is discouraged. The financial statements of an entity whose functional currency is the currency of the hyperinflationary economy, whether they are based on historical cost approach or current approach, shall be stated in terms of measuring units at the end of the reporting period. The corresponding figures for the previous period reported by ECS 1 and any information in respect to earlier periods shall also be stated in terms of the measuring unit current at the end of